Shut up, bitch!
You are retard.
Yeah.
Physical or mental?
No, not retard.
It's a very good you allow a retard to eat. Yeah, brother.
Your question, if you were walking through the woods and you knew there was 1,000 grizzly bears, what would you do?
Get the hell out of there.
Yeah, I'm not walking at woods. Well, is he on cocaine?
I would go in. Okay.
Is that bear on cocaine?
I would bring bear spray.
The point is, you can't hide from grizzly bears. You can't hide from a $20,000 Bitcoin. If that happens, sell your wife, get on OnlyFans, do whatever you got to do, sell your house, and buy Bitcoin.
Sell your wife?
Hey,
what is the 17th century? Risky behavior like gambling problem, party lifestyle, sexual behavior. You just go out there and party life, city girl, and taking drugs, drinking alcohols, doing all these things. I went through college and I didn't smoke pot. Dissector, you are an idiot.
Hey Ryan, why don't you pull up Amazon's margins real quick?
Well, yeah, I'd have more of a grin on my face than Stephen Hawking on Epstein's Island.
I'm off as a smug cock when he said that.
Wow, fiscal philosophy, you're not very smart at all. You screw up, cash flow kings. Dissector, you are an idiot.
Hello, everybody. It's Saturday, and it's 8 p.m. Eastern. And at Saturday, 8 p.m. Eastern, you could be doing a wide range and variety of activities and potentially lifestyle behavior. Fiscal, what are potentially some of the inappropriate sexual behavior, potentially inappropriate lifestyle behavior you could be having at Saturday, 8 p.m. Eastern?
Well, I mean, you could be gambling, alcohols.
The gambles, the alcohols.
Drugs, risky sexual behaviors, all kinds of things. Sell your wife. I don't know.
Sell your husband, sell your dog.
You could be taking a dump next to another guy. It could be in a forest with 1,000 grizzly bears. Get out of there. I don't know.
Cocaine bear.
All those things and more potentially.
I know, and more. Yeah, that's half the scary part of it. Welcome back, everybody. It's Saturday, 8 p.m. Eastern. If you couldn't tell, our setup looks a tiny bit different for the meantime. Somehow we finessed StreamYard, so we still have like 90% of the rights without paying a lot of money. By the way, we are due for another bill, so if you haven't already, smash the like button. That's the best free thing you can do for us. Obviously, we only do it for the money here on the Cash Flow Kings, and right now we're bleeding out money like some certain cannabis companies that start with an M and end with an S. More specifically, their stock ticker. We're bleeding out money though right now, guys. This is just not good. So if you want to help support us here on the Cash Flow Kings, watch us dance for 20 to 30 seconds within limit. Become a channel member. It's only $2 a month. $2 a month, you get a lot of quality value, if you ask me, Fiscal.
Absolutely. It's probably the best value that there is.
I agree. You get weekly deep dives in some cases. We haven't had any suggestions recently, but if any channel members want us to go over deep dive for our standards, at least, found out this week we weren't very smart at all. And we've actually known that for a while, but you want us to just go over some stuff on Finchat.io, sponsor or affiliate of the channel, we'll be happy to go over it, share our 2 cents, and maybe potentially some investment ideas that we have. Speaking of investment ideas we've had, an investment idea that we've had is High Tide, stock ticker HITI, and we are having none other than Blake on our emergency High Tide episode. Blake, welcome back.
How are you guys doing tonight?
I know it could be worse. We're at 220.
I warned you there'd be volatility.
Oh, absolutely.
Day one, first time I gave anybody this pitch, expect extreme volatility. This is why I have like a dollar cost averaging approach, where I just like buy a little bit every dip. The goal should always be to buy from dips, not on dips, even though you're buying on dips, because like it's far more important that you're buying an undervalued asset than that you're buying like on the short-term dip, right? 'Cause
Like
the short-term dip is just noise.
The momentary bottom doesn't really matter as much as just it's undervalued now. That's when you.
Yeah.
Yeah.
Because I have a long time frame outlook, I don't really care what the short-term price action is. As long as the company like fundamentally stays healthy and these financials stay, fairly attractive, I'm here. Remember that the thesis was never that this company was going to do really well every single year from now to eternity. The thesis is that this is a super cyclical industry. And by cyclical, like for example, later tonight, I'm going to pitch you guys another industry, right? That is also super cyclical, but it is supply and demand cyclical. High tide cannabis is emotional cyclical. Euphoria takes over the markets, just like crypto. It's the same sort of deal with crypto, where it's super cyclical. There's hot markets, there's dead markets, there's small cap season, so to speak, in crypto. Same sort of deal here in cannabis, and eventually, buying here during the nuclear winter that is right now, where everybody's hopes are in the gutter. This is the best time to be, right? This is the entire industry is in super despair that Trump got elected, and everything's in the gutter. And then on top of that, he's tariffs with Canada, so the entire Canadian everything, all their economies under severe uncertainty right now. I can't even call it stress.
Yeah.
Have tariffs actually kicked in? Or have we just
I
threatened?
think they're supposed to April 2nd, if I'm
Yeah.
remembering. Yeah.
So we're sort of in this danger zone, right? Where everybody's freaking out about their Canadian investments. And I was just talking to Capital Mindset the other day, like 4 or 5 days ago, and he's like, "Yeah, we're producing a list of high quality Canadian things to buy out during this upcoming dip because we expect markets hate uncertainty, right?
They do.
So until we get some very clear, very solid, something that just doesn't look like it's going to change situation around this Canada tariff situation, until that becomes stable and we get clarity, I expect continued volatility. I expect, I am emotionally prepared for like $1.30 a share.
Yeah, you mentioned that.
Yeah, imagine that. Imagine how thirsty I'm going to be to load the boat at $1.30. So the deeper it goes, the happier I will be, because my thesis is not it's going to do well every year. My thesis is it's going to survive hard times. Remember, I chose a last man standing for this industry because I knew there would be hard times. And eventually, at some point in the next decade, I keep repeating this, euphoria is going to grip this market, and I'm going to have a year that is so spectacular. It'll be worth, stress and boring and the opportunity cost of me slowly dollar cost averaging into an unknown rally that I don't know when it's going to arrive.
Mm-hmm. What does that rally look like? What are we thinking? 5x, 10x, 100x? I'm thinking of thumbnails right now.
That's for the industry I'm going to talk about later.
I'm going to pull reverse Uno on you too, because I have another company that I'm researching. I don't know if I'm going to name the ticker, but Fabio definitely knows. I'll just say that.
The next time there's a euphoria-driven rally in this industry, I'm expecting most of the industry to 10x, something like that. It might be more, it might be less. It really kind of depends on macro factors. Like, are we in an environment where the Fed is easing? Is the Fed tightening? What's consumer confidence at? There are a lot of other factors related to the macro economy that will determine how high that surge will happen. But eventually, at some point, euphoria will grip the market, and everybody and their brother will be talking about cannabis stocks. And that is going to be the top end of that cycle. And that's going to be when I'm going to want to sell. And it's very hard for me to pin, 10x, 15x, whatever. I just know eventually I'm going to hear, I know that there's some serious shitco's out there. And I'm going to hear about people bragging about their gains in those shitco's. And that is a pretty good indicator when to leave. Like at the top of the parabolic rally, it's gonna rip up. It's gonna go parabolic. As strongman would say, vertical lines, bro. At some point, we're gonna see vertical lines, and that is when I'm gonna start dollar cost averaging out, because I know it'll be an unsustainable hyper parabolic rally. They always fall back down, just like a short squeeze or whatever. Same sort of deal. And that's sort of where I'm at. Is I'm extremely patient. I'm here for the long term health. The long-term prospects. I truly believe that Raj has built a very special business model. And in the meantime, that's why I have the conviction to just keep on dollar cost averaging no matter what the share price is, because I don't really care that much, because my thesis is not around it doing really good every year from now to eternity. It's that this is a cyclical industry, and right now everybody hates it. That's when I need to buy.
And wow, what coincidence is Wendy's becomes a channel member, and you guys already know what that means. We're going to keep it short and brief. Blake, I don't know if
I'm not a dancer.
You're trapped here, but here we go.
Sure.
If only Bacon Memes was here to do that. Thank you very much, Wendy's, for giving us $2 a month. But back to High Tide this week. We had an emergency call or meeting on the Discord this week, everybody. For those who aren't already in the Discords, both are linked in the description. Highly recommend you be there. But we had an emergency call with Capital Mindset on Wednesday, which was basically the giant day that, High Tide traded down. It was like 14%. Earnings were, like, as you said, meh for what they have been doing the last couple of quarters. So obviously this is the same company that will trade down 10% on great earnings over time. So you can only imagine what would happen on meh earnings
during a period of extreme uncertainty and high fear. Yeah.
Yes. So do we want to kind of recap the, I guess, 30 or 40-minute call? I don't know how long you were in there for, Blake.
So I had just gotten off work, and then I showed up, and I basically caught like the last 5 to 10 minutes of it. And so I basically caught Capital Mindset's summary, which agreed with mine, was that they were willing to take a margin hit to retain and capture and grow revenue. And they're really just focusing on capturing additional customers. And I think they don't really care what their cash flow is as long as they can stay positive for the whole year.
Yeah. Free cash flow is actually negative this quarter.
That's what it seemed like Raj was saying on the earnings call. They still expect to be positive for the fiscal year, but and they did say this even when they first went cash flow positive for the first time for a full year, that quarter to quarter it would be lumpy, but each full year they still expect to be positive.
Yeah. And that's basically what I expect going forward for the next decade. Like, there will be quarters where they just plain spend a bunch and don't earn a whole lot, and we'll see revenue growth from that. The ripples, the echoes of that, 9 months, 12 months later, we'll see that revenue growth.
Yeah. And I've had some people, in comment sections, some people are feeling burned. Like, they feel like, and I think wrongly so, because they didn't actually listen to what was said, but what they heard was, and this is what they wanted to hear, that free cash flow was going to be up and to the right every quarter, is what they wanted to hear. And so they think that they were lied to because that wasn't the result.
Over long time frames, and assuming you include volatility and lumpiness, yes. Yeah. It will slowly go up and to the right. But there's going to be a lot of chop in there. There's going to be whole quarters where it goes
They basically took that, it's going to be lumpy, but, remain positive, for the year and each year, here on out. They took that as, each quarter it's going to compound on itself and just keep growing.
It's not going to be smooth.
Yeah, right.
Yeah.
I think they just kind of misinterpreted what was said, or weren't giving a gracious enough interpretation. Yeah.
Yeah.
Because their stock's down, so they're feeling it, basically.
Yeah, a lot of people, and I'm guilty of this too, a lot of people tie how they feel about their investment to the share price. The share price goes up, you feel great about it. Share price goes down, you don't feel great about it.
Yeah, and it's certainly how other people will judge you about your picks, at least in the shorter, medium term, yeah.
Right, and it's like, well, the thing I bought was on sale. It went on even deeper discount. I'm buying more, and then you're being critical of me because the thing I bought is now on sale for even more. It's so the stock market is the only place where perfectly rational people will buy a brand new set of clothes one day and then walk into the same department store the very next day, see that their clothes are comfortable clothes, they love the clothes, they're on sale, they're like 20% off. They get angry, they rip off their clothes, and they leave the store. Let this sink in. Like that is absolutely irrational behavior. And so when I buy stuff and then the share price goes down, I just buy more. I mean, I check the thesis. Why did it go down? Did something fundamentally change? But as long as the long-term story is still good, it kind of doesn't really matter what happens in the short term. because you choose a long-term story that is of such high quality, you expect speed bumps and stuff like that. They're going to be speed bumps, unknown unknowns.
Yeah. Cash Lookings channel member Cabo asks Blake, would you hold after some parabolic squeeze happens, or once it squeezes, would you bounce?
Yeah. So even if it goes to like $50 a share, I'm probably not going to sell my last 100 shares for bragging rights, because on my deathbed, I'm going to be like, yo, look at those shares I bought down at $1.04.
And imagine they start paying a dividend, dude. You can start, you could use the Warren Buffett Coke. You're racking in $8 million a year from a $20 investment. I don't know.
Yeah.
I do have an interesting quote that I had from an anonymous member of the Cash Flow Kings community. Happens to have a goatee and happens to not like Dividend Dude. Do the math, everybody. But
I like Dividend Dude just fine. He seems fine. Yeah.
Yes.
I got no problems with him.
Good young man. But this individual said, quote unquote, Ryan, be very careful buying high tide. Keep it as a low speculative fund position. I think you are underappreciating the political risk of a Canadian weed company. You can't discount political and currency risk when you model a stock. That's a big risk.
Currency risk.
And that's all the quote. That's the quote that I had from a very worried Cash Flow Kings channel member that is not to be named. What would your response be?
What kind of currency risk they're under, considering they purchase like glassware?
Like the devaluing of the Canadian currency is probably what they mean. I would think.
What interactions do they even have with the United States? Like they purchase flour and concentrates from Canadian companies. They purchase ancillaries from Canadian companies and from developing world across the ocean and stuff like that.
Yeah, I guess it's the thing where
basically nothing from the U.S.
Yeah,
so,
we're I guess transacting in our brokerages in U.S. dollars, and so wouldn't an unfavorable like major shift in the exchange rate make the relative value? Yeah.
Gotcha.
Yeah,
he means like a long-term shift in the value of Canadian dollars versus U.S. dollars.
Yeah, like if they really go down the tubes somehow in the long run,
things are not going to get that bad. Here, let me let me share my screen and I'll show you guys some charts. Let me figure out how to do this because I've never done this on StreamYard before. So let me present.
Yeah. This was a Cash Flow Kings viewer who was very worried. And then he said this before earnings. And then the day of earnings, when, of course, the stock went down, you got the classic told you. So
told you
rational
so.
investing. Yeah, the rational investing. Oop. Tell me when to pull it
I think
up.
I'm ready. Let me know when you guys can see my screen.
Yeah. We got it.
Okay, so this is the business life cycle chart. Every business goes through a life cycle like this, where they go through like a launch phase, and they typically hemorrhage a bunch of money, and then once they get their feet under them, they can find a successful business model, and they pattern that out. Maybe you're like Applebee's, and you just copy paste, or like what this company's doing with the Canna Cabana model, you just copy paste it once you find success. And then eventually they struggle, and there's a variable number of years between all these different phases. Sometimes they're decades, but every company goes through these. Eventually they begin to struggle. It becomes difficult for them to find new revenue, and they have to spend money on advertising. They have to deal with competition. There's all that stuff. They hit a shakeout period where the growth investors leave. And right in that shakeout period is actually where a whole lot of people who consider themselves value investors but aren't, like Warren Buffett, Charlie Munger, my style of value investor, they will buy fully mature companies thinking that that's what value investing is, just because they're mature. And that's not what value investing is. It just so happens that Warren Buffett and Charlie Munger like to choose fully mature companies that have the possibility of life cycle extensions. You see that life cycle extension thing there off to the upper right. Every time a company busts into a new market, produces a new product, any sort of brand new revenue stream, that is a life cycle extension, and each extension goes through its own separate business life cycle. So each extension will have its own launch phase, its own growth phase, its own shakeout, its own maturity, all of this. So high tide, when I made this chart like a little over a year ago, they were just about to leave the launch and enter growth. And they were sort of in that transition. And maybe I made this chart 2 years ago. Nowadays, I would have this red arrow a little bit further to the right, just to the right of the dotted line instead of just to the left of the dotted line. So just for context, zooming out, this is where we're at. And this is why I'm here, right? This is, you see, this is typically when companies see profits inflect upward into the positive territory. And this is also when you see them start keeping large cash reserves. Like they go from having more total debt on their books to more total cash on their books. That's sort of what we're seeing with high tide. It's not a quick process. It's a transitory period. It takes a while. Oh, shoot. How do I go to the next slide? Here we go. Okay, this is the one I was talking about with risk. You guys still with me?
Yeah.
Okay, so I remember 9/11. I also remember the 2008 crash, and we all clearly remember COVID. And right there is Trump tariffs. That's where we're at now.
Wow.
Yeah, let me ask you, is this a buy the dip opportunity for Canada in general? And I'd have to say yes, because I don't think it's going to stay down there, right? Like, look at how this chart works. Look at how history works. I don't know how long this period's going to last. Like, if you go back to the 08 one, that was a much longer dip than the COVID crash.
Yeah.
COVID crash.
The triangle is a little bit wider.
Yeah. COVID was just two vertical lines, vertical line down, vertical line back up, right? 9/11 and Lehman were more natural downturns, right? The choppy down, choppy up. It takes some time to resolve, you know. COVID was really more of like an artificial economic shock. The shock was not caused by what was going on in the economy. The shock was caused by an outside factor, and we experienced the economy's reaction to that outside factor, right? Whereas if you go back, the 08 crash, that was our economy caused that crash, right? We had a dramatic imbalance. So it took longer to resolve. That's the whole point. So here we are, Trump tariffs. Look at how deep that dip is. Sentiment is super sour. This is when you want to be looking at Canadian companies. This is when you want to think about buying, not just high tide, just stuff in general. You know, whatever Canada's good at. Banks, energy companies.
How are the banks looking?
I don't know, but I know Canada has some fairly high quality banks. I don't own banks. And we can go into that some other time, but the gist is I don't know how to truly read between the lines on their financial statements like I can do for a manufacturer or a retailer or a service provider. And it's because they're money lenders. So I personally have no business investing in a money lender. They're just plain outside of my circle of competence. Let me go to the next chart here. So here's high tide's gross margins. This is what people are freaking out about. Gross margins are down 3 quarters in a row. And traditionally, they've been sort of hanging out between, you know, like around 26 to around 28, right in there. And then last quarter, you remember I was all nonchalant. I was like, oh, it's back down to like 26%. You know, I'm not worried. Well, now it's at like 25%. So should I be worried? You know, and I'm not worried. But should I be worried? That this is a question you have to ask yourself. I'm not worried. I'll show you why here in a couple of minutes. But this is a chart that I like to show you guys every quarter. Every quarter, we see this chart develop further. This is how I measure efficiency with any company. You take the gross profit and you use that as a baseline, and that is the actual income the company earns, you know, like that's their profit. And then they have to hemorrhage all their expenses out of that, you know, wages, advertising, debt, all that stuff, insurance, everything. It all comes out of that gross profit. So this is how I measure efficiency. And this also tells me some things by looking at the chart this way. So for example, free cash flow was lower than operating income. Anytime that happens, the gray line goes below the orange line. That is typically a sign to me that the company spent more than they typically do in any given quarter. I don't know what they spent it on, right? You'd have to dig into financials and read through the statements, and maybe there's a sentence or two in there being super clear why there was more spending this quarter. But they straight up spent more than they earned from operating income. And I'm pretty sure when I looked at the report, it's because they paid off their debt. They paid off an old line of debt before it matured, and then they took out new debt. And in order to pay off that debt, they spent some money, you know, and this is a big part of why free cash flow was negative this quarter. Without paying off that debt, that gray line would not be below the orange line. I'm pretty sure. Maybe I'm wrong. Maybe someone with an actual degree in accounting will come in and correct me. But that's what I see here. I'm seeing gross margins crush, right? And we're seeing everything warp down on this chart because of that, right? Because what's happening on this chart's warping down, okay? So let me explain why I'm not worried. You guys take economics? Ryan, I know you're in microeconomics right now.
I don't want to talk about the last test score I had, but, I generally enjoy myself there.
Sure. So right here we have supply and demand curves. And right here we have volume, we have price. These are the four, like the four horsemen of retail or whatever, right? So all I see high tide doing is shifting around this diamond, right? There's these curves. You can force the curves up, you can force them to the left, the right, all based off of what you do, right? High tide can choose its gross margins. They are a discount retailer. And here's remember on Twitter, I talked about the hidden margin of safety. I hinted at, I was like, oh, they have a hidden margin of safety, try to tease people, come watch me rant about this.
Yeah.
Their hidden margin of safety is they can just raise prices.
Yeah.
If they get in really bad trouble, they can go from being a deep discounter to just a discounter. I remember what Walmart did back in the early 90s. Walmart was blanketing the Midwest. Ryan, I know you're way too young for this.
I'm here for the ride. A little bit of the story, but yes.
Yeah. Walmart was blanketing the Midwest with stores, and they were putting stress on everybody from Toys R Us to your local mechanic to Kmart. They were putting stress on
Sears.
Everybody. And they were a deep discounter. And then around 1993, 94, right in there, they sort of slowed down store growth a little bit, and they switched from being a deep discounter to just a discounter. And their gross margins expanded, and they became extremely profitable. And that's the Walmart we have today. And so we are seeing high tide go through a phase similar to what Walmart was, where they ended, right, 93, 94, they ended their deep discount phase and went into just merely being a discounter. And I think that eventually high tide will shift from being a deep discounter to a discounter, like long term, like 5 years from now, 10 years from now, after they've really truly won a market. Once you truly establish dominance like Walmart did, once your moat is rock solid, you can just raise prices by like 3%. No one's going to notice because everyone else is already out of business anyways. You don't have a whole lot of competition left. So that is the hidden margin of safety. If they ever get in real financial trouble, okay, they can move around on this chart. And on this chart, they have the choice, right, of setting a higher price and getting a lower quantity. They do not choose what foot traffic is directly. They choose what they want foot traffic to be indirectly by setting the margins, right? You set a lower margin, you're going to expect more foot traffic. You set a higher margin, you expect lower foot traffic. So if they get in real financial struggle, they can choose to stop trying to grow revenue. They can choose to accept having maybe like 2 to 5% revenue decreases, right? If they want to maintain a higher cash flow situation during times when they're under that kind of stress, So I really like that about this company. By being a deep discounter, they have this added flexibility into their pricing, where when the going gets tough, they can just jack up the price like 3%. And I don't think the customer is really going to notice a small rise, right? So they have the social contract with the customer. They need to make sure they never break that contract. If you raise prices 3%, that's not breaking the contract. You raise prices, so that you're only 3% less than everybody else, that's breaking the contract. You have to still have a noticeable discount to everybody else, or or the social contract you have with the customer is ruined. And so that's the limit. They're on this chart that we're looking at. There's some dotted line on here somewhere that they can't go above, or they break the contract with the customer. Yeah. I don't know where that line is. And Raj and the team, they might not know where that line is, but they know that line exists and they can't go above it or else. So that's their limit. They have a margin of safety. It's not infinite, but it's there. They have a few percentage points of edge over everybody else. They have the elite program, right? That's cash flow. That's money in the bank. Selling Cabanalytics data, that's money in the bank. So these two high margin revenue streams that are sort of side gigs for this company, they're giving it this financial edge over everybody else, over all their competition. So during hard times, they'll be able to lean into those financial edges, and they'll keep the company afloat, and they'll keep the company cash flow positive during periods when their competition is not. And that's a big part of why I chose this company. One of the many factors. They have this hidden margin of safety. They can always just change prices a little bit. They can't change prices a whole lot, right? They'll break that social contract, but they can change prices a little bit. And recently, right, we're seeing revenue go up and margins go down. That's because they've been pushing these lines down, right? If you look on the table there, these lines, the reason we're seeing gross margins go down and revenue go up is because they have chosen an equilibrium point that is lower than it used to be.
Mm.
And if you listen to Raj, he's talking about the black market now. He's running out of legal competitors, right? Yeah, let this sink in. He is running out of legal competitors, and now he's like, okay, well, who's next? Let's go crush the black market. I'm going to get my bros to get on Twitter, and they're going to put all the police departments on blast in Canada, which has been happening. Have you guys been noticing that? They're like,
No, what happened?
Hey, police departments, why don't you actually enforce the laws that you have on books and shut down some of these illegal stores that aren't paying taxes and are potentially selling people like hazardous materials that hasn't been tested?
Yeah, I'd hope if you're a cannabis dealer in Canada and you're unlicensed that you're going under the bridge. You're going to sell cannabis to your boy. Yeah. Raj Grover's going to be there waiting for you.
Yeah. And so, I mean, I don't know what kind of lobbying they're actually doing up there, but I personally would want them to hire someone full-time just to drive around from like city council to state province congressmen and just express to them, we need you to actually enforce the laws around the books. We need you to actually like do the thing that you said you would do. Like it's kind of important that like the rule of law actually persists in order for this whole system to work, and not just cannabis, but everything.
You know, Fiscal, we really are kind of running short on some cash. Maybe we should go up to Canada and do some black market shutdown work. Getting paid under the table by Blake. $5 for every shutdown.
There was a question in chat.
I think I'll pull it up. If possible, can you ask Blake about the sundial? Also, if the Libs lose in Canada, what impact will that have on high tide?
So the second question is a much shorter answer, so I'll do it first. I don't think that any amount of conservative political movement in Canada is going to change the laws around recreational, because the Canadian government has become sort of addicted to the cash flow that the industry produces. And once that happens, it's very hard to get a government to be like, nah, I'll just walk away from that income. It's very difficult. Even if you elect a bunch of conservatives up in there, they might make some additional restrictions. They might do things like lower the maximum dose of an edible, you know, like those sorts of things. It's comparable to like firearms control in the US. They might try to limit the magazine size or the barrel length or all that, but they're not going to just straight up make firearms illegal ever, right? The same sort of thing with Canada. If hyper-conservative governments get in charge up there, I think we're past the point of no return. I don't think they're just going to make it de-recreational. I don't think that's ever going to happen in Canada. It would take a dramatic cultural shift for the government up there to want to do that. Okay, so your first question.
The genie's already out of the bottle.
The genie's already out. Yeah, exactly. They're already hooked on the income that the taxes and the revenues. Like they're not going to walk away from that. So the first part of the first question, so SNDL. Okay, so let me start with way back in 2021 when I was researching the industry. I narrowed it down to 6 companies, and then I narrowed it down to 4 companies. SNDL was one of the 4 companies. I almost invested in SNDL until I got to the layer where it was like, okay, quality management and strategy. What strategy are they employing? Is it a good strategy? Do I feel that they have the competency to pull that strategy off? Okay, so when I did that assessment, that's when all the red flags for SNDL hit. Their books looked fine. Their financials looked fine at the time compared to the rest of the industry. They had recently diluted shareholders for $1.18 billion. Like let this sink in an industry where everybody else is struggling to tread water, and this euphoric rally happens. Sundial's like, this is my chance. I'm raising all the monies ever. And they diluted shareholders for like all of everything they could. And they really, really wrecked those shareholders. But they had this massive pile of cash. and they were burning. I think they were burning like 150 million a quarter or something like that. Like they had an atrocious burn rate. And so what do you do in that situation? Well, I know what I would do. I would try to make my company more efficient. I would use the money as a buffer to make that happen, so you don't have to keep diluting shareholders. But what I would have done with most of that 1.18 billion is actually, and this is going to be off the wall, I would have gone and put it in Altria Group and collected the 10% dividend and used that money to actually bankroll the operations of the company until you could actually tread water on your own, right? Because what else are you going to do? You're hemorrhaging all this money. Well, and you get to form a relationship with a tobacco giant, where instead of them owning you own part of them, right?
Mhm.
So it's sort of beneficial in the other direction. So, so then they started making loans, and they started making loans to failing competitors. And then a few months later, those competitors file bankruptcy, and then SNDL has to take on their assets. Has to take on their assets for pennies on the dollar. Like I'm talking, they're paying like 6 cents for every dollar, and they're getting stores, they're getting grow ops, greenhouses, manufacturing, packaging. This kind of sounds smart at first because you're paying very low prices for things. But these assets, they're low quality assets. They already drove their first owners out of business. Like let this sink in. This is like, I'm not going to buy a good car. I'm going to buy a junker with engine trouble and a muffler that's about to fall off. Like intentionally, over and over and over again. I'm going to imagine if Hertz decided to rent out a whole fleet of junkers.
Yeah, not accretive.
Not accretive, yeah. So some aspects of what like I think Zach is very competent, and that's actually part of what's terrifying here, is because over the last 4 years, in addition to handing out loans, I've also seen him step into a struggling company, pay off all their debt, take a bunch of shares, grab 51% of the company, intentionally mismanage the company so that it becomes less profitable. Because now he has control of it. Once it becomes a lot less profitable and the share price goes down further, he buys the other 49%. I've seen him do this more than once. Okay, so as soon as he bought 5.4% of High Tide, I'm like, get the fuck out of here. Like I need everybody to rally around this. I need Raj to change some laws and write himself some founder shares so he has like additional voting power or something. I don't really know what it's going to take to make it so it's impossible for Zach George to do a hostile takeover.
Maybe we need the Oracle on him, Fiscal. I'm getting some ideas.
We'll bring the Oracle on as an expert consultant and ask him for ideas on like dirty, underhanded tactics that we could do to help out this company. Yeah.
His car disappears one morning by coincidence.
So SNDL, he's competent. He has a good amount of equity. He's got a lot of money on the balance sheet still. Balance sheet looks attractive. Income statement is terrifying. They're hemorrhaging money still. They also bought a chain of liquor stores. That's actually one of the better decisions they ever made. But they run this predatory loan sharking business, and that is the core of what they're doing. And I really don't like it. And it's, like one of the reasons I like High Tide is because you have a win-win-win relationship between the customer, the shareholder, and the owner, like the management. In SNDL, the win-win relationship is nowhere to be seen. There is no win-win between the ownership and management. There is no win-win between management and the customers, and there's no win-win between the customers and the shareholders. So like it's not a triangle of trust. I can't touch that. I can't even. I don't care how competent he is. He's the 1980s version of a corporate raider in cannabis, and he's doing an okay job. Like I'm not going to say Zach George is dumb. I'm just going to say Zach George has chosen a very difficult strategy, and it's not one I'm interested in.
Yeah.
And it's terrifying because now there's this big burly cash flow heavy hostile takeover machine who theoretically wants to take my baby away from me and mismanagement down into the gutter so it can buy the other 49%.
Yeah.
I'm not interested in that.
Yeah. Now, there was a lot of investors. They happen to be in MSOS, potentially some incels, that were saying things that were not very sentiment nice on High Tide, saying that they're going to buy it up for a $1 per share, saying that High Tide's worth nothing. What would your response be to those individuals?
So MSOS is an ETF that has absolutely roasted its investors over the last 3 or 4 years. And part of it Part of it's because of the management of the ETF. They are charging active management fees, but they're just passively managing. And there's only like 3 or 4 companies in the industry that are actually worth investing into to build an ETF around. But because the ETF laws in the SEC, they're forced to include a bunch of shitco's. And so because of how the regulations work and having all the shitco's in there, MSOS is not like it. I actually only gave out a buy rating on it once, and I've been covering cannabis a lot. And that was because it looked like Biden and the DEA were going to push rescheduling through before the election. And that just didn't happen. I don't know. I don't know why it didn't happen, but it just didn't happen. He didn't put enough pressure on the DEA. I don't really know. But this was $55 a share when I first started investigating the industry. This ETF was $55 per share. It's an open-ended ETF.
It's impressive to actually do that bad.
Yeah, it's an open-ended, which means when you put money in, they make new shares. When you pull money out, they take out shares. They disappear the shares. So your buying and selling pressure doesn't actually affect the share price. Your buying and selling pressure gets arbitraged away. It's complicated. I don't want to go into the details, but just don't worry about it. Just know, because it's open-ended, your buying and selling pressure is meaningless. And so the reason it's going down is because the underlying values are going down, and the managers are harvesting their 2% per year. And the whole thing is operating off of some rather inefficient swaps that have some frictional costs. And all of this is adding up to MSOS really only being good for short-term holds, like a 6-month rally. It's not a good long-term investment. So even though it's down here at like $2 a share, I mean, I could be buying down here, but I'm probably not going to until sentiment changes.
Yeah. Cabo asked another question because he's a channel member. What are the odds that Trump pushes legalization in order to make up for tax cuts?
I sort of feel like he might do it at some point over the next 4 years as a distraction.
Yeah.
So anytime the heat comes on Trump, he will just pull in some other hot topic and put it right in front of your face, and that's what you have to talk about now. And I think at some point of the next few years, he's going to pull this exact rabbit out of his hat. And all of a sudden, we're just not going to worry about the Iran crisis that's been going on the last week or whatever the thing is. I don't know what it is, but this particular rabbit is going to dominate the news. And then he's going to try to push it through Congress or something. I don't know what it's going to happen, but the sentiment is that the sentiment can change at the drop of a hat.
Yeah.
That's the sentiment.
I didn't touch her inappropriately, but let's talk about cannabis. The weed people love me. Okay, exactly. They love me. It's true.
He only has so many of these rabbits to pull out of hats and distract us all with, and eventually he's going to rummage around in there and pull out cannabis. It will happen.
Yeah, they call it the weave. Blake said it would make sense for SNDL to invest in all trade to dilute. Do we think that it's likely their investment in High Tide is not about takeover, but simply a financial investment?
So High Tide doesn't pay a dividend and won't help SNDL with their negative cash flow. So any long-term investment or even short-term investment that SNDL makes should be to help mitigate their cash flow issue. They have a huge amount of cash available, but their operating cash flow, they burn a small amount of money every quarter. And so they have to continually make good long-term and short-term investments with their massive pile of cash in order to counter out the losses from operations. It's not huge, but it keeps me from touching the company.
And second part to the question, why would they want to take over High Tide? I think it's just...
Well, if they have the whole thing, then it does help their cash flow situation. Yeah. Because then they can decide to just absorb all that free cash flow themselves.
Is it Captain D's or Long John Silver's that just had to declare bankruptcy? Do you guys know what I'm talking about? They were bought by a private equity group that also owned a shrimping company.
Oh, wasn't it Red Lobster?
Yeah, I can't remember. I think it was one of those. And so they were forced to offer unlimited shrimp, which cost the restaurant money, but the shrimping company made money hand over fist on it, and the private equity company did the math and were like, "Yeah, I don't care what happens to the restaurant. They can roast for all I care." And that's sort of Sundial's attitude is, I don't care what happens to these other people. They can roast for all I care, and that's a big part of why Sundial's scary. It was Red Lobster. Okay. I'm glad somebody knows what I'm referencing, because I didn't pay a whole lot of attention to it, but I thought it was an interesting situation.
Yeah, I heard about it as well. I thought it was very interesting.
So
Red Lobster, we love Red Lobster. It's true.
For them, they own a chain of discount retailers called Value Buds. The insides look like Ryan. Go ahead and type in Value Buds and do an image search, and you'll see what I'm talking about. It kind of looks like a rundown Blockbuster. Like when you step in there, you know it's a discount store because they are not spending money on new carpeting or paint, stuff like that. Yeah, and so if they were able to get a hold of High Tide, that's it. They have a monopoly on retail now. The only two large retail chains that are left in Canada that have not gone under are Value Buds and Canna Cabana. Everybody else is basically bankrupt. There's like one privately owned chain left that besides Value Buds, and they only have like 30 or 40 stores or something. I haven't looked at them in like a year now. It's been a long time, but they're not particularly large. They're not particularly scary. But Value Buds is, and so if Sundial was to purchase High Tide, they could include them in their package, and then they would own a 100% of the discount retail in Canada. And they could potentially, similar to the Red Lobster thing, they could force High Tide into an unfavorable position, which is what they did to Nova Cannabis, right? Like a year and a half, 2 years ago, they forced them to sign a brutal franchise agreement. And I don't want that. If that happens, I'm out. I will go find other industries, other companies. There are a few other companies in this industry in Canada that are not hot trash that I could theoretically put money into. I already mentioned one to Fiscal, and I think it's done quite well for Fiscal since I mentioned it to him.
Yeah.
I don't really want to name it because it's so tiny.
Yeah. Yeah. We'll talk about that one another time. But yeah,
sure.
It's been decent since I took my taste.
Yeah, and they just had an earnings report, which I have not read yet, but the reactions from my bros on Twitter talking about it was that it was overall fairly positive.
Yeah, I'm actually trying to free up some cash to get some more because and I made it a very small thing. Yeah.
They do really well in their niche, and we can talk about that offline, but they're similar to High Tide. They dominate their niche. They do well with what they do.
I'm pulling up Raj's official tweet for the question we just had.
I mean, why ask me if you can get an answer from Raj, right?
Hey, that could happen in the future. Give it a month.
Not
saying anything specific, anybody. Take a hint here. But this is basically just what Raj said about the Sundial thing. We acknowledge today's filing from Sundial, which underscores the significant undervaluation of our shares and serves as further validation that basically they're superior business. Our board of management has carefully reviewed this matter and remain fully committed to acting in the best interests of our shareholders. We will continue to closely monitor the situation and take decisive action as necessary to protect and enhance shareholder value. So sounds pretty like they're not going to let this shit fly as far as Raj is concerned.
Rogers does not want his baby to get taken away from him. And like legally, it's going to be pretty difficult for Sundial to do that because there's actually laws that say that like growers can't own more than a certain number of retail store locations. Yeah. And they already own Value Buds. And so like if that province already has like, if you have a limit of say 10 stores in that province and you already own 8 Value Buds and then you buy Canna Cabana, and now you own 8 Canna Cabanas. So you have 16 stores in a province with a store limit of 10, you got a big problem. And so that's an issue that Sundial would have to deal with if they were to buy 51% of the company. Also, the paperwork they filed said, I want to be a passive investor. And a lot of people are playing that up. They're like, oh, they filed a 13D or 13G or what I can't remember the letter, but they filed the paperwork that says passive. I don't want to see it on the board. None of that. Well, that's at 5.4%. What happens when they get up to like 22% or something and they're all like, okay, I do want to see it on the board? They're just going to file a different piece of paperwork. So that first piece of paperwork that they filed, that's BS. You can't just like trust that that's going to stay that way. That's their opinion at that time. Opinions can change.
Yeah. And nobody can read their mind. So they could be less than forthcoming on that first piece of paper. If they know that more filings will come and they can just change it when it's convenient, right?
Yeah. Yeah. So I think that they are not actually making a long-term investment in High Tide. I think that every quarter they buy 4.8 or 4.9% of the company and they dump it into the earnings. And that is why we see this behavior that I talk about for most quarters, not every quarter, most quarters, it tanks right after earnings. And I think that this quarter, see, when companies do this, when large whales want to accumulate a position, they will hire a trader and they'll give the trader a certain number of dollars and they'll say, buy X number of dollars. Well, High Tide was in a downtrend And I think that they misjudged the strength of the downtrend. And instead of picking up 4.9% and missing the filing requirements, they found themselves at 5.4% and had to file. And it's basically like they got caught with their hand in the cookie jar. I think that's what just happened.
So you think they accidentally went over the 5% just because the share price shifted so suddenly?
Yeah, and that trader, he doesn't know that there's a limit. He just was told, here's $10 million, get some fucking shares. Yeah, get shares now. And you have today to do it or tomorrow. And if the share price keeps going down and he's accumulating, he could pick up more shares than he was intending. Not he was intending to get them all, but he could pick up more shares than the company intended. And that could be why they had to file. It's really up in the air, and we won't get a clear answer until like a whole nother quarter goes by, and SNDL has to mark whether or not that 5.4% is still on their books. Did it go up? Did it go down? Is it still there? We won't know until like a few months.
Worst case scenario, what happens? Best case scenario, what happens? I know it's very vague.
Yeah, worst case scenario. Zach gets a hold of 51% of the company somehow without it driving above $3 a share. And then gets a seat on the board and forces us into a really nasty franchise agreement. And as soon as he gets that seat on the board, I'm out. I'm gone. Even if Raj is still here. Because Zach will intentionally screw it up on purpose so that he can buy the rest of the company later. That's the worst case scenario. Best case scenario is he tries to get to 51%, and we're at like $12 a share, and it's parabolic screaming upward because people know there's a hostile takeover happening, and so retail won't sell, and people come piling in to buy, and they run out of money at like 47 or 48% and peak out and are unable to buy get to 51% threshold. And then I get to giggle really hard and sell most of my position, and then because I know Zach on LinkedIn. I'm going to reach out to him on LinkedIn and troll him a little because he has direct messaged me on more than one occasion.
Oh, I'd like to get a word in as well, Zach.
You write some Seeking Alpha articles about him and his company, and he might reach out to you too.
In a negative or positive?
In a negative way. He implied I was stupid.
Oh, I see.
Yeah. He reached out to me, like, hey, what's up? And I was like, hey, what's up? And he's like, like I'm picturing his face all frowny. He's like, this is really dumb, is basically the gist of what he told me about my article. And I was like, your strategy is really dumb. Good luck. And I told him, I was like, I would love to one day write an article about how you built an empire out of everybody else's broken toys. Because that's what he's doing. He's trying to build a race car out of the parts that you would normally build a jalopy. Yeah. And that's where we're at. Is he's got this janky Formula One car type thing in his garage, and he thinks it'll win the race.
Yeah. What are your thoughts on? There was a certain individual that was very worried about the Canadian consumer coming up. I know you talked about it a bit on Wednesday, but generally, if you could recap any worries or whatever.
I'm not actually that worried about the Canadian consumer. And the gist is during light and moderate recessions, right? People buy more cheap emotional pick-me-ups, less, right? So we're talking lottery tickets, we're talking donuts, soda.
Things you could be doing at Saturday, 8 p.m. Eastern that just aren't.
Not all of these activities are super healthy, right? But they're cheap emotional pick-me-ups. Okay. In addition to all of those things, alcohol, tobacco, cannabis, right? It is a cheap emotional pick-me-up. So during hard times, people buy more cheap emotional pick-me-ups, not less. Now, that is only true to a point. During really, really hard times, people pay their mortgage first. People pay for food first before they pay for the luxury version of a food or, ice cream or whatever. During really hard times, the cheap emotional pick-me-ups also disappear. And that is when this company is going to truly struggle, is during a serious recession. So I don't think the company would survive a 1929, long depression. I absolutely believe with extremely high conviction, they will do well during a light recession, and even during a moderate recession, they'll tread water okay.
What do you think about this?
I was gonna get to that after. It's a really good question.
So that's what I was talking about with the founder shares. So if I as a shareholder vote for Raj to have 10 times voting power, his 5% of the float becomes 50% of the voting power, and all of a sudden no one can outvote Raj. However, you want a situation where if the board were to unite, the board could outvote Raj, right? You still want that. You still want them to be able to put him in check, to put him in his place. He's still human. He can make mistakes. I rave about how awesome he is. That doesn't mean every idea he has is going to be the best possible idea ever, right? So the board is there to keep him in check, to keep him rational, to build shareholder value. Because remember, they're shareholders. All the board are really loud shareholders he has to listen to. So we want to produce a situation where he is too loud to let an outsider in, but the board can still drown him out. And that's a delicate balance. I don't know how these other companies do it, like Meta and stuff. And there are other companies that have done a founder shares thing where they gave the founder owner additional voting power. And I just want to make sure we don't lose the balance of power when we do that.
How much money would we need to raise to potentially acquire some high tide shares for the Cash Flow Kings LLC Fiscal? Just to piss off Mr. Zach.
It would be a lot to be worth it to even have.
You make a lot of money, Fiscal. I'm sure I could scrape some dollars together. Get a loan.
Yeah, small personal loan.
$1 million. Yeah,
there's a precedent for it.
Yeah, that would be. Yeah, we get a little.
I have income. I can get a loan.
Yeah,
there's a precedent for it.
Yeah, there's a precedent for it, and then use margin afterwards, of course.
Yeah, of course. Oh, I'm just so happy that he's getting. I just saw the video of him like going on a complete rant. Have you seen that, Fiscal?
We the Khmer's?
Yeah, Khmer. Have you seen the video of them going on the rant? Because I could pull it up right now. It's mint.
I've seen some of the things that have happened in the last few weeks, but I don't know if I've seen.
I'll be pulling this out.
I know he got wrecked. I don't know the details, but I've been hearing through the grapevine of all the other people talking. He got wrecked. He was close to 200K, and now he's down like below 50 or something like that. Just in the last 3 months or whatever.
He's in the low 40s now. I think
it's impressive. Like genuinely, how
75% losses. Like so when I own a penny stock and it has a 75% dip, I buy more. But he's on margin. He has no more buying power.
It's impressive.
Yeah, that's no good.
He has himself convinced that he's making all this income from it, though. Still, denial.
Yeah. Okay, we do have the clip courtesy of Cashflow King's official accountant, VT Shill, Blue Pill Shill, Strongman Personal Finance. Here's the clip, courtesy of Discord legend Henry.
You don't know how to play it. Because you don't know how to play it, it doesn't mean it's bad. Because it's not bad for me at all. It's not bad for me at all. I'm nowhere close to being bad. They don't know what the F they're talking about. That's why I say they don't know who the fuck I am. They do not know who I am. I don't care if he's Kenny. I don't care who he is.
I think I was in his channel when he was doing that rant.
You don't need to lecture me anything. It's just so dumb and so idiotic because they don't know how to invest, and then they want to put a blame on somebody. And I refuse to do that. I don't put blame on anybody because number one, I don't put myself in a situation like that. And so then I don't blame on anybody. I don't point any finger to it. I don't go to somebody's YouTube and question them. I don't go to somebody's Discord and question them.
Okay, so Khmer is having a meltdown.
I love beating on the dead horse. That is Murata, we'll say.
Yeah, what are you going to do with someone who's just driven by arrogance and greed and refuses to listen? He is too into himself, and right there he's like, I don't blame anybody. I'm thinking to myself, I'm like, yeah, you definitely don't blame yourself. like you couldn't possibly accept responsibility for the fact that you chose a strategy that multiple people warned you about, and then it bit you, and now where are you at? What's your plan here?
So we do have predictions ongoing from Cashflow King's viewers and people who are invested into the saga, let's just say, that know what's going on, of how this all comes to an end. I said he flees the country. Fiscal said self-deletion. Blake, what's your answer?
I think he's just gonna stop posting one day, and we're just gonna stop hearing about him. And then, like 5 years from now, he's gonna pop up back on YouTube as like a gaming channel or a reaction channel or something silly.
Lifestyles.
Yeah. Like how to live dirt cheap in Florida.
How to get the girl.
Yeah, I think he's just gonna admit defeat one day to himself and just stop posting. I
He'll
don't know
shift
when
to
that'll happen.
red pill content.
Yeah.
Don't think the single mom. Don't be standing alone in the corner. That's not me.
I could totally see him making a video one of these days or getting a clip where he just goes way too, like, we've already heard, like, you know, the Khmer pooping stories. Like, he just goes way too intense in details of an experience that he had. And I'm not looking, I kind of am, and I'm not looking forward to it at the same time.
Yeah. And I heard Kenny give him lectures like more than a year ago.
Oh, I'm so upset that we couldn't get Kenny on.
He's just not that interested in it.
Yeah, I know. It's unfortunate.
I went in there and lectured him. Capital Mindset went in there and lectured him. I know of at least a dozen people that went in there and tried to help him and explain to him what he was doing and how it was going to screw him one day, and it has. So I'm just
on like a not even 6% downturn in the market.
Yeah, like
year to date.
Yeah. And it's silly because like many of these people that came in and they're very good at making predictions. Like I am fairly good at making. Have you guys looked at my tip rank score? Like brag about myself. Have you ever looked at my tip rank score?
No.
No. What is it?
Type in tip ranks Blake Downer right now. And this is why where my ego and my chutzpah comes from is that like most of the rest of the planet has no clue what they're doing, and I merely don't suck. That's my attitude. I don't suck. Everyone else does. So I'm right 73% of the time. And Khmer, and I'm one of like a dozen people that went in there and was like, Khmer, you got to watch out for this. You have to be careful for this. You can't just have this. This mindset will get you in so much trouble. And that's where we're at. He had multiple people similar to me that are skilled or knowledgeable, or many of those other people have actual degrees in accounting and finance and stuff. I don't. I'm just a hobbyist. And he did not listen to any of us.
Cody asks over what time horizon the 33% return is.
So tip ranks always the default setting is 1 year.
Yeah, I can't go any higher than that.
If you were to pay them, you could look at what they've done over other time frames. Yeah. I don't pay them either, so I don't really know what my performance is.
We're bleeding out money right now.
Other than my
we'll choose not to.
Yeah, and we all know the 5-year stock chart is king, and 1 year.
Yeah, 5 years are king.
Yeah,
I don't know. Year to date, 3 months is making a comeback.
Yeah.
Do you want to pitch us on this new company you told us?
Sure.
About
Do you want to switch to members only mode?
Oh. All right, we might have to save that for after the show then.
Yeah, does that mean ending the stream and then starting a new stream, I think?
We'll save that because I want to cover a few more topics before.
Okay, sure.
Because there's another company that I might mention too that I've been.
What else is on the docket?
I'll put it in the private chat, but I think those in the Discord and Capital Mindset will know what I'm looking into. And I also have been recently selling out of more Starbucks just because there's just so many better opportunities, and if I'm getting out of a quality return still. So, Fiscal, what have you been buying recently?
Not much really. I've been having a certain amount allocated into Google and a company called Mr. Cooper, another one, KKR, a little bit.
Oh, actually?
Yeah. TSSI.
I know that's been rough. Private equity company.
Yeah.
It's
that's too much research for me.
That's all in an account that's not really featured because it's not mine exactly, but
I see.
I have some influence.
Yeah. Oh, I didn't know about. I'll have to hear more about this. Members only. Yeah. So would you recommend going forward with high tide? I know you mentioned that there's a very real chance that this could be trading at like $1.30. Would you recommend just the dollar cost averaging strategy for those who are already potentially at a 16% loss on their capital, which is nothing in the long term?
So the reason I am not worried at all is one, the company is a long-term winner. So we got that going for us. And two, I'm still dollar cost averaging. I am still building a position. So I really don't care what the share price does over the short term, because if it goes down, that just means I get to buy even more shares. Like every time I move money, like from my checking into my brokerage, and then like it settles and I buy more shares. If the price is at $1.30 versus $2.60, I literally get twice as many shares. And my thesis was never that it was going to be a smooth ride between here and there. In fact, I should be thirsty for, $1.20, $1.30 a share, because that'll let me finally get a chance to load the boat with confidence. Now that because the last time it was at $1.30, it was a much riskier investment. And I'm going to be honest with it, it was a much riskier investment. The company had yet to achieve dominance. It had yet to have that margin expansion and those efficiency improvements, the efficiency from scale. they back when it was trading, like when I brag about those shares that are $1.04, I didn't buy a whole lot of shares down there because this was a more speculative buy back then, right? The company's fundamentals have improved significantly. And if it goes back down to $1.04, the situation will not be the same. It will be significantly more attractive, right? Even though the share price will be the same, the situation will be significantly more attractive because the fundamentals of the company have improved so much. Yeah. So if it goes down to, $1.20, $1.30, $1.50, whatever it goes to, I'm just going to keep on buying more. And I'm going to keep dollar cost averaging until this euphoric rally happens, 2, 5, 10. I don't care how long it takes. Eventually, someone's going to make a law change, and then everybody, all the crypto bros are going to come storming into cannabis and telling all their brothers about it and telling all their friends about it. And the entire industry is just going to go euphoric, and then I'm going to exit. Yeah. And the reason I have this confidence is just because I chose the sort of like the last man standing of its industry. So that's why I can adopt this attitude where I don't care what the share price does. I really don't. In fact, if anything, if it goes down, I'm pretty happy about that because I get to buy more.
Do we have any update to the overall net worth allocation of high tide? I know you were mentioning a 30%.
Yeah, I'm still at like 10%. In fact, now that since it's gone down, I think it's more like 8% or something. I don't really know, but it's around there. And I would love to move up to 30%. And if the share price goes down low enough, right, I can get to 30% far more efficiently and end up walking away with a lot more shares. Yeah. Right. 30% means a lot different if you bought at X price versus Y price. They could be very different things. So I'm just going to keep dollar cost averaging. And as I approach 30%, I will probably adopt a stance that I won't be able to accumulate more unless there's a significant price dip. And then even then I'll just be buying little nibbles because I don't want to be at like 40%, 50% and then buy more. 30% is a massive risk. Like if the company goes to, like right now I'm at 10%, if the company goes to zero, no big deal. It's not going to change my quality of life. It will change when I get to retire, but it won't change my quality of life between now and then. If I put 30% in here and then it goes to zero, that will change my quality of life. Yeah. That will mean not being able to upgrade houses in a few years. That will mean not being, there'll be big problems that will come, ramifications from losing 30% of your net wealth.
You aren't getting the guac and chips at Chipotle. Let's just
yeah. I won't be going to restaurants anymore for a while.
Oh, yeah. By the way, I think we should all give a moment of appreciation to Chipotle. Number one, they hooked me up with a $7 discount this week. Number two, the guy who was serving me is always very, very nice, and we had a nice conversation. So bullish Chipotle, even at like the 50p that it trades at.
Well, people have recognized it's a good company. That they do what they do well. So once it's clear to the general public that a company does what it does well, it usually demands a high PE like that. Like what Costco does and Nvidia and all that stuff. These companies are they serve their niche well. Like I mentioned with Fiscal earlier, that one company it serves its niche well, and eventually, once the rest of the world realizes this, those companies tend to demand elevated PEs.
Yep.
Interesting.
There was definitely a question. Oh, do we want to cover Nike Fiscal? Because that was getting absolutely pounded this week. So basically this week, Nike which has been definitely a questionable and controversial investment that none other than Double D's Dividend Dude owns. They had not great earnings, depending on who you ask. Majority of people would argue that Nike had lackluster earnings. The thesis just doesn't really make the most sense. It's still pretty like overpriced, if you ask me, for the amount of growth that they're producing. Their market share is very high. You got to have questions of like where they're going to get that new market share from. Just things are not looking bullish for Nike. Send prayers to Dividend Dude, everybody. You know, maybe there's a euphoric squeeze in the shoe game or market. I don't know. But yeah, not the greatest time to be a Nike right now. So, Fiscal, any thoughts on Nike? Are you going to short it?
I'm not going to short it. I just have like such a general lack of interest in like shoes and apparel that for me it's tough as an investment because I can't tell you where their next hot new thing is going to come from that might extend their revenue growth into the future. I can't tell you when something that they sell might go out of style or any of that. And that's kind of like the thing that made me hesitate with Crocs, but at least Crocs is cheap,
Yeah.
So
Crocs is actually, that's interesting.
Yeah.
I don't know if I'm buying, but I've heard some people saying that it's the short Nike, long Crocs might be the bullish move going forward.
Crocs does have those amazing margins.
Yeah, they have good margins, and if they can get Hey Dude rolling, then that might be pretty bullish. I'm going forward. All right, ladies and gentlemen, we are at the 1 hour 15 mark. We're going to do a members only live with Blake after, where we all pitch some potentially new ideas that we're going into. Not financial advice, of course. So if you want to go over there, become a channel member, the link is in the description and here. If you haven't already, just smash the like button. Blake, where can the people find you as per usual?
I write for Seeking Alpha. You can find me here every few months. And if you get in the right Discord, I'm in about 15 different Discords. And if you're in one of those Discords and I'm not a very active person there, I promise you I'm still reading the posts and stuff like that.
He's pretty active in my Discord.
Yeah. I'm in a bunch of different Discords. So if you find me, you can reach out to me and at me and start a conversation. Go for it.
He's very open to talking.
Yes.
When I have the time.
Very, very approachable. He won't bite.
Thank you to everybody in the chat tonight. I saw we tire on dividends, always providing interesting thoughts. Sajig, Hans was also there, very angry German, but we appreciate your presence. Channel member Kago, Big Pharma Shell, Dex, Padre, appreciate you all for tuning in tonight. Seymour Duck, thank you once again to Wendy's for becoming a channel member. And of course, Risky Behavior. All right, thank you all for watching. Smash like button, subscribe. Members only with Blake after, and of course, do dividend stocks, not drugs. Cash flow is king. Oh yeah.